We're jumping straight into Lockheed Martin today. Everyone is watching the price action, but the real story is the emerging defense supercycle fueled by escalating global tensions.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
Make sure you subscribe and hit the like button, because honestly, the sheer momentum we are seeing right now is just wild. I mean, taking a step back, today it's Tuesday, March 3rd, 2026.
Right.
And we're looking at a massive 36.14% year-to-date return. The stock literally just hit a new 12-month high.
Yeah, it's been an incredible run, and the immediate catalyst for that spike was just yesterday, March 2nd.
The news breaking out of Iran.
Precisely. Shares gained over 3%, driven directly by news of the Iran conflict. And, just to be clear up front, we aren't here to weigh in on the geopolitics or take any sides on that situation.
No, of course not. We're strictly looking at how the market is reacting to all this.
Right. And the market is reacting to real global budget shifts. Whenever tensions rise like this, you see this almost immediate rotation into the defense sector.
And Lockheed is clearly catching a huge wave there. Let's look at the sheer scale of their operation. I mean, 2025 full-year sales hit $75.0 billion.
Which is a 6% year-over-year increase, by the way.
Exactly. And Q4 of 2025 was just an absolute monster.
Oh, totally.
Revenue hit $20.32 billion. That beat analyst estimates of $19.84 billion pretty handily.
Let's break that down even further, because you really have to understand why investors are piling in right now. It's not just chasing headlines.
Right, there's a structural advantage.
Yeah, it's the moat. Think about the concept of switching costs. Take the F-35 program, for example.
Oh yeah, once a military actually integrates that jet into their fleet.
They are locked in. I mean, you can't just easily switch to a competitor. You're talking about completely retraining pilots, changing out maintenance crews, completely restructuring supply chains. It's too complex.
It's basically a decades-long commitment.
Exactly. And that dynamic gives Lockheed unmatched scale. Plus, you have to factor in their proprietary intellectual property.
Right, especially in hypersonics and missiles.
Which protects a massive 30% market share against massive rivals like Northrop Grumman and RTX.
And then when you look at the ultimate safety net for this company, the cash flow generation is just incredible. They generated $6.9 billion in free cash flow in 2025 alone.
That is a staggering amount of cash to have on hand.
And it is backed up by a record $194 billion backlog.
I always tell people to try and wrap your head around that number, $194 billion.
Talk about job security, right?
Seriously, if you're working at Lockheed, that backlog essentially guarantees you've got plenty of work coming down the pipeline for the foreseeable future.
It provides such incredible visibility for future revenue. It's not a guessing game.
Which leads right into their 2026 guidance.
Right. They are officially guiding for 2026 sales to hit somewhere between $77.5 and $80 billion.
And what's really interesting there is the double-digit growth they are specifically expecting in the missiles and fire control segment.
Which makes perfect sense, given the macro environment and the hardware that's in demand right now.
Looking at the flip side, we do have to talk about the bear case here. Primarily the risk of geopolitical de-escalation.
Right, like if the Iran conflict cools down quickly.
Exactly. If we see a sudden diplomatic resolution, the current defense rally could be muted almost overnight. Markets tend to adjust very fast to a drop in global tension.
True. And we should also give you the lowdown on some recent execution hurdles. It wasn't entirely a perfect quarter.
No, it wasn't.
Because despite that massive Q4 revenue beat we just talked about, earnings per share actually missed the mark.
Yeah, they came in a bit light.
Right. EPS came in at $5.80 versus the estimated $5.94.
So let's simplify why that happened. Because it was heavily impacted by a $479 million pension settlement charge.
Ah, okay, so a one-time thing.
Exactly. It's an accounting reality. These one-time charges can temporarily obscure what is actually very resilient operating profit underneath the hood.
Which is ultimately what helped drive their full-year net earnings to $5.0 billion anyway.
Right. The core business is still highly profitable, regardless of that specific pension charge.
And honestly, that upward 2026 guidance, plus that $194 billion backlog, that largely insulates the company from any short-term drops in the geopolitical temperature anyway.
It definitely provides a massive cushion against volatility.
So what should people be watching next? Let's talk about the 30-day trigger calendar. You definitely want to circle April 2026.
For Q1 earnings, yeah, that's going to be a big one.
Yep. Analysts are projecting an EPS of $6.93.
And beyond just the earnings call, you'll also want to keep an eye on upcoming industry conferences.
Specifically the ones focused on hypersonics and missiles.
Right. Look for any updates from management on how Lockheed actually plans to execute the $194 billion backlog. Securing the contracts is great, but executing them profitably is the next hurdle.
Execution is everything. And then, broadly speaking, you really just need to watch the macro drivers over the next quarter,
Yeah, any expansion of the Iran conflict, obviously.
plus any movement on U.S. defense budget increases.
And of course, that aggressive ramp up we're seeing in European NATO spending right now. That is a massive tailwind.
All huge catalysts to watch. All right, let's get to the lowdown exit for today. With a $194 billion backlog, essentially locking in years of future revenue, it begs a bigger question for your own portfolio. As global tensions fundamentally reshape national budgets, how is the definition of a safe haven asset evolving right in front of us?
It's definitely a fascinating question to chew on as the market shifts.
Absolutely. Thank you for joining us today. Remember to subscribe and hit that like button so you don't miss our next breakdown. Catch you next time.